Hey traders, happy weekend to everyone. I'm just doing some analysis on this weekend and I want to share a few things with you when it comes to the actual stock market that we should be focusing on. And then also I want to share with you some things that, as you're an individual trader, it's important for you to understand as an individual trader for you to become really good at this thing called trading. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. All right, traders, see that trading course there? Again, I'm actually giving you free membership access to that trading course. I used to charge for it, but I'm still giving away free access to that. So link in the description. So one thing I want to start off with just a few things that I'm noticing here when it comes to the stock market, and some really important levels that we need to keep an eye out for. Okay, and the reason why I'm bringing this up is because one of the biggest mistakes that I've made. I've been trading the markets now for 19 years myself. I've just ticked over 19 years myself. 19 years trading these markets, guys. Okay. And one of the worst mistakes that I've made myself has always had a bias, one, of the market, and then two, having confirmation bias of that bias, right? So what I mean is this, is that right now the stock market's going up, right? And we're seeing there's actually a lot of positivity in the markets right now. Now, I'm not saying the market's not going to go up, okay? This is the hardest thing about that individual traders like yourself. It's hard to understand what I just said there. We're always looking for that certainty. The certainty never comes in the stock market. So a lot of people right now, because we're starting to get a lot of good bullish movements in the markets, okay? And when we look at the thing like the fear and greed index, so this is the fear and greed index here, okay? And we're starting to get into the extreme greed. Like we are more greedy now than we ever have been in the last 12 months, okay? And what happens every time we get this greedy? We end up getting pullbacks, and you can see where we are right now, right? Getting to the extreme greed. So we're probably going to see a pretty big pullback every time we got this greedy in the past, that the markets had a big pullback. I may even title the video that. So the big thing I'm trying to share with you right now is a lot of people are getting really bullish these markets, right? Because we're starting to see some really big up movement. A lot of these stocks are making some good upward movement as well too, right? In this environment. So the tendency is to say, well, the market's going up, so it's likely to keep going up. And there's a lot of bullish news and so on and so forth, right? So when we're trading these markets, the thing that's really important to understand is that, one, we don't ever want to have, or we have a view of the markets, okay? That's one, but never trade that view. Here's what I mean. I'll do an update for you here. I'm saying this is what the charts are telling me, so on and so forth. But to become good at trading, what do we need? We need to have an actual system approach. If you look at any really successful manager, successful hedge fund manager, even Warren Buffett, what do they all have? They all have a system that they're looking for. They go through a bit of a checklist before they get into any long-term investment or any investment in general, right? And same for trade in the market. I've been privileged now to have two 7-figure traders, meaning they make more than $1 million a year, coach me. And the biggest thing that they have is that they both trade different trading systems, different approaches, but they're both $1 million traders. What is the key? The key is actually having an actual system, right? That's where your discipline and especially your patience in the markets is really going to rocket you to the next level there. Makes sense? So the whole thing about that, and again, guys, if you actually want to learn my trading system, in that trading course, link in the description, I'm going to give you access to a webinar, but not only on the webinar, but in that actual trading system, the very last video, I've actually got a bonus video there. And so it's only a real short video. It's only got 20 minutes long, and it shows you my #1 trading pattern that I use to trade in any stock market crash. And you'll be able to see that there, or in any bear market, really. So the purpose of me bringing this up for you guys is because I really want you to, the biggest thing for me is, one, having a bias. Oh my goodness, the market's bullish. It's definitely going to go up and it cannot go down, right? And because of all the bullishness in the markets right now. But then what do I do? Well, with that said bias, then because I want to be right with the bias, I then go look at YouTube videos, subscriptions, and feeds that's going to back up my thesis or my bias. Do you see how that's a really big rabbit hole? And I actually learned this with Donald Trump being elected. Okay, when Donald Trump was elected back here, and I'll bring this back here. So this is the S&P 500. So when Donald Trump was being elected in the good old White House, what was happening was this. Through here, that's when Donald Trump was being elected. Do you know what was happening at that time? Every single thing that I watched was about the market crashing. Now, why was I watching that? Because I had a very big, large, short position in the markets at that time. Why did I do a short position? Because I followed the herd. It wasn't a trading setup or trading system. I followed what the herd was doing. And so therefore I actually then when I placed the trade, I even went down more the rabbit hole, and I only focused on those things that said the market was going to crash. Now we all know what happened, right? It went through an extraordinary quality boom from when Trump was elected to 2018. So what we want to be doing is we want to be making sure that we are not having a bias and especially not looking for confirmation bias. If you are only watching things, if you are only watching newsletters and medias and so on and so forth, that's going to support your thesis of the market, your bias in the markets, then you're missing the big piece of the puzzle, right? And the big thing that I always say to my traders is, especially even when I'm trading the markets, which I have my trading setup, and again, in that trading course, I give you my trading setup, right? I just give it to you for free. The whole thing about this is this, right, guys? So the whole thing is that when we're trading the markets, we can be wrong. The position I'm going to get into today can be wrong. And the biggest one of the things that I always say to my private clients, every time I get into any single trading position, I say to them that this position right now can be a losing trade. Now, if it's a losing trade, is it going to hurt your trading account? Yes or no? And if the answer is yes, then we need to bring down our risk on that trade to make sure that if it's not if it is a losing trade, we're protecting ourselves. But do you know what the benefit of what I just said just then? The benefit is this, okay? Is that when we're trading the markets, again, trading the markets is all about having setups, right? We'll look for patterns and look for setups. We don't just say, well, I think the stock market's going to go up, so we buy call options. You're probably doing that yourself, and it's not a good way to go. But what I just said a minute ago, and what I'm sort of getting at there is that when we're trading these markets, okay, and when we're doing that, the best thing is this: is that you may, if you get into a trade and your risk is too high, that trade may be a profitable trade overall, right? But if you're having too much risk in the markets, you may actually get out too early before it even hits your stop loss because you don't want to lose money because you've got too much risk, and that trade eventually runs off a profit. You guys probably know exactly what I'm talking about. You've probably been there before. So here's the ironic thing, what I've just said there, okay? Is that the ironic thing that I just said there is that if you actually bring your risk down to make it much smaller per trade, to where if it is a losing trade, and you must accept that up front that this trade can be a losing trade, then your risk is going to be small. Now, what's going to happen on the flip side of that? That your emotions are going to be calm, right? You've already accepted the fact that if this is a losing trade, this is what you're risking. So you've already accepted that fact. But then what's going to happen? You're going to stay emotionally calm within the trade, and the trade that you may have gotten out too quickly for a small loss because you couldn't have a loss because you're risking too much, because you're risking smaller. Now the trade runs on for profit, and your account is actually now in positive territory on the exact same trade by taking smaller risk. So by taking smaller risk every trade, your account actually grows faster. Do you know what I'm saying there? So the whole thing I want to bring this back to here is that right now the stock market is at these levels right now, and here's really big and key important levels that we need to be focused on. The S&P 500 has this trend line coming up through here, okay, and we have that through there. So if indeed we do this and then we do something like that, we break down, guys, this is going to be a false breakout, right? So here's a high there. So if we start to develop this pattern over the next week and we break down, it's going to get hammered, right? Just like, look at this here. See this back here? See how we actually had a lot of resistance? It actually poked its head back above, and then we had a big movement down. We could be getting the same thing happening over here again, right? And especially if we start to break down here, we may get a little rally, and then we're probably going to see a bit of a waterfall. So we must accept that. If you are long the markets right now, you're probably just saying, John, you're full of shit. You have no idea what you're talking about. Guys, I'm telling what the markets, it's not about me, right? Mr. Market. So that's the S&P 500. This is the Dow Jones as well too. The big key levels for me is at 33,000. Notice how we're doing this. Notice how we're just going sideways through here. So if indeed we do actually, for some reason, start to break down like that past the 33,000 level, then guess what? Now, where's the next support level? Down there at 29. And then we're probably going to hit that, bounce off it, and then maybe even there's also the next sort of level of support down there around that 26 level there. Make sense? So this is a possibility. I'm not saying this is definitely going to happen, right? Because what can happen is we do this and then we do something like that, right? That can also happen as well too. What's the big key here? We wait for the market to tell you what's going on. We get the breakdown bar. Oh, there's a high probability now we're going to head down. Okay? We don't preempt. Break up. Okay. Well, this actually maybe now getting ready for a big move to the upside. So let's look at the Nasdaq as well too. The Nasdaq's the big one, right? Look at the Nasdaq. The Nasdaq actually broke back up to these highs. And so as you can see, if the Nasdaq starts to do something like this and then breaks back down below here, right? Just like it, see how, look, let me do this here. So look at this back here, right? So just like it did back here. So if we have this level here, see that there? This actually could be the exact same thing right now. Look at this here. Came up, sideways, down, up. Sideways, down, up, and then back down again, right? So this actually, and what is the big key here? Where is confirmation of a false breakout? So if we go back to the last setup here on the Nasdaq of that breakout, we can actually see that it was indeed, I'm just looking at the support and resistance levels here. That's the level there. That's the level there, right? So we're probably looking at, see this big breakdown bar, probably somewhere through there, I would say. So see this big breakdown bar right here, right? That was what? That was now the resistance level. We're breaking back down. Look what happened. Came down and then we came back there. So in that being said, if we bring this back over to here, where is false breakout confirmed level for us? It'll be this market through here, right? So we have this here going sideways, and then we do something like that, and then we could be rallying down to 10,000 level, right? So this is the big key here. If you're long the market and we get something like that, the market's telling you, hey, we could be developing the exact same pattern over here.